Good afternoon, everyone. I am CA Rena Tehlani, moderator for the afternoon. We, CPE, are delighted to welcome you to the webinar on overview of business valuation and role of CAs in MSME sector. We will be starting the webinar in a short while. Meanwhile, let me appraise you about the CPE committee. Dear members, as the role of chartered accountants is evolving continuously in today's global dynamic world, our need of the hour is to innovate as per the requisites of the contemporary business environment and upgrade the education system and curriculum of the chartered accountancy course. The CPE's committee is organizing the seminars, webinars, and national conferences on a continuous basis to upgrade the training and provide guidance to the members so that they can look forward beyond the traditional practice areas and explore new areas for business and profession. Ladies and gentlemen, before starting the webinar, I would like to welcome our respected chairman of CPE committee, Shri Purushottam Khandelwalji. Dear sir, is the chairman of the committee and he is a vice chairman of the committee for members in entrepreneurship and public service, and he's a convener of RBA Directorate of ICI. Sir is having 25 years of post-qualification experience in the field of audit, direct tax and indirect tax and intellectual property rights. This year, he is devoted in fortifying CPE's framework and guaranteeing quality across its entire operational spectrum. This year, the major focus of CPE would be on upgrading the CPE portal for enhancement of the branding and professional competency of members. Welcome, sir. Please share with us a few words of wisdom.
Good afternoon, respected faculties for these two sessions, Nitin Mehtaji and Somil Singhvi moderator of this session, Reina ji, my office of CP committee, Payal ji, and respected members, those who are viewing this seminar. Currently, I am heading the CPE committee, which is the mother of all the committee. Institute is celebrating 75th year of inception. Vishwas ke 75 saal. In this 75th year, ICI has given a lot of to the stakeholder. The Prime Minister rightly said that the signature of Prime Minister of this country is not more power than the signature of Prime Chartered Accountant. That says the signature of Chartered Accountant carry more power than the signature of Prime Minister of this country. So this is a very important function given by the Parliament. Whenever and whatever you carried out the financial attestation function, it is very important for you to first you believe in that function and then you carried out the signature. So you are the very important part. Recently, I met to the Yogi Adityanath and they said that we are the major contributor in the Indian economy, which is the dream project of the Narendra Modi ji for the 5 trillion economy. So without a contribution of chartered accountant, it is not possible to develop any country, because what we are doing any businessman to the industrialist. We are providing our financial services, auditing services, and attestation function. So my humble request to all the members to please upgrade your knowledge, because what we are selling our knowledge, we are selling our services. So first of all, you have to update at any times. So my committee is dedicated to upgrade the knowledge of members in any forms. This year we have organized a lot of conference, seminar, webinars across the country. And this particular year, this month, Ajit Naji is aware that we organize a program from Kashmir to Kanyakumari. And the whole month they are full busy with these conferences. So because this is the rolling period, we have this year there is no rolling period, and you have to complete CPN this calendar year only. So please attend in the large number. And this year we are sending emails to each and every member at the end of the month that much CPE you have completed and this much is pending. So we are regularly updating the member also. I will not take much of a time. I am always thankful to both the speakers. Both are young and dynamic. Nitin Bhai is doing regularly practice in the Gujarat High Court, and Somil is a very dynamic in the business merger and acquisitions. So the today's My best wishes to the success of this seminar. Thank you so much.
Thank you, sir, for inspiring us to upgrade ourselves. Thank you so much. Business valuations in today's era have been very common and frequent on occasions like mergers and acquisitions, sales, and various regulatory requirements as per the laws, and even the accounting standards requires business valuation. To enlighten our minds further on the topic, we welcome Mr. Somil Singhvi to as our distinguished guest, who is also AIR 30, and he has been continuously practiced in the area of business valuations, transaction advisory services, and international taxation. He has provided various training sessions on various platforms. CA Somil Singhvi, sir, we welcome you for joining us, and over to you, sir.
Thank you very much. Thank you, Ranaji. Thank you, Purushottam sir, other speaker, Mr. Nitin Mehta, and everyone who's listening to me here on this occasion. Very well, welcome to my session. So I believe I'll share my screen. So I believe everyone must be thirsty, right? Post lunch session, and I believe everyone had their lunch, and now everyone might be thirsty. So I have something to offer for you, a bottle, right? So if I offer you a bottle, how much will you pay for me? Pay it for me, right? जैसे आप एक जोक्स अपार्ट देख सकते हैं कि एक बॉटल है बॉटल माइट कॉस्ट यू ₹20 in normal transactions like अगर homogeneous market है if there's a homogeneous market and you are paying for a bottle then it might cost you ₹20 but suppose if I twist this example and say that if you are hiking a mountain and you are there on the mountain at some 1,000 feet then how much will you pay for this bottle? Maybe ₹50. And suppose if I change this example again and I say you are in the midst of a desert where there is no water available to you since in long distances, then how much you will be ready to pay for this bottle? I believe whatever the amount you have, or 1,000, 2,000, or if you're extremely thirsty, then you might pay whatever you have to buy this bottle and quench your thirst. So this is what is a value, a valuation. We talk about so valuation. Warren Buffett has said a very beautiful sentence: "Price is what you pay, and value is what you get." That means a transaction, whatever you are paying is a price, but value has economic substance, and the value which you get, the in this example, like if you are quenching your thirst, then that value that you get by quenching your thirst is something different. So I have tried to highlight the difference between price and value, and we'll understand a concept. So price is what? Price by definition means amount of money or other means of consideration that you have paid for an asset. आप एक asset को acquire करने के लिए whatever you have paid is what you call a price. So price is what? An ex post measure, an outcome of the transaction. So in this example, what we have taken, you paid ₹20. Suppose if you are in a city like Mumbai or Bangalore, where the bottles are easily available, you might pay ₹20 for this bottle. And suppose if you are in a mountainous area, you might pay 50 or 100 rupees for this bottle. So the price is the exact measure or the outcome of the transaction that you are going to pay for this an asset. And price may have a relationship or may not have the relationship with the value. So the value that you are going to get from this bottle might be different from the price. So in the difference also, I have highlighted value is not precisely measurable. Value can be different from what you are paying. Price can be measured precisely. Value is not a static figure. It can be variable. We'll discuss it further, but price is a static figure, like what you are paying for the price. And value is a measure of economic value. Economic value, by that I mean like demand supply or the production. So depending on the economic factors, how much is the demand and how much is the supply is the value. And price may or may not take consider and it may consider a non-economic substance as well, like branding ho gaya, or the socio-economic factors that might vary the price. In our example, for this bottle you are paying 20, or for some other bottle of different brand you might pay 30 rupees. So every company has its own brand value, and accordingly it may vary the price. So understanding or delving more into valuation concept, like valuation is a procedure or technique of estimating a value of an asset at a stated time and for a specific purpose. Like in our example that we are considering right now, the bottles example, the value of a bottle is different in different stages. Like you might pay 20 rupees in a city, or you might pay thousands of rupees in a desert where you don't get water. So at a particular point of time, at a stated time and for a specific value, the value might be different for the asset. Similarly, if we come to a real life scenarios wherein suppose a startup had a certain value, or it has been agreed at a certain valuation before pandemic, and after pandemic the valuation might have changed for that startup. If we consider the edtech companies or the other startups as well. So the pandemic has created or has been such a factor which changed the valuation of a startup or maybe some other companies as well. So valuation has to be seen at a particular time, at a specific purpose, and for a specified asset. We discussed that valuation, a value from economic or commercial perspective that we discussed. It has economic, like demand and supply thing. Valuation is not a science, but it's an art. Though we take number of figures or number crunching we do in the valuation, but it is based on the subjective judgment. There are various factors in the valuation, like terminal value or the discount rate or the future growth rate that you are going to predict. So these are all subjective based on the transaction or based on the judgment of a valuer. So it is not that it is a proper numbers, but it is an art of valuing a thing. And valuation is not a precise number. I can't say valuation of this particular company is 5 crores 42 lakhs 57,353 rupees. It can't be that specific. It is generally in a range. A range, like it may be ranging of 5 to 6 crores, or a particular range that we can define for an asset or for a company. And valuation gets impacted by the external developments. Like for example, in our real life scenario, if we take the crypto or the gaming industry, with the advent of retrospective GST amendments and the income tax act getting applicable or the notices receiving, the valuation of the gaming companies have dropped drastically. So political developments or regulatory developments may impact the valuation of a company. So why valuations? We heard valuation in routine life. We read in the papers, or we see in the news channels as well. So why valuations are required, and what are the various areas where valuation are generally required? I've tried to categorize into 4 parts: deal-related, regulatory, financial reporting, and others miscellaneous. So deal-related valuations can be in maybe purchase or sale of business. For example, like recent case of Mankind Pharma, where the ownership has been changed. So this can be a case. Or like yesterday, Bain decided to liquidate 1.1% in Axis Bank. So this can be a deal-related transaction. A merger or demerger, like Borosel decided to demerge its scientific entity. So this can be a demerger case wherein there is a valuation required to value that demerged entity as well. For a JV, entry and exit. At the point of entering, if two companies are entering into a JV, at that time valuation may be required like, or at the time of exit, if the one of the company want to get exit from the JV, then what is the valuation or what are the total assets that needs to be considered in the valuation will be done. And but always for the fundraising purpose, like SME IPOs, mainboard IPOs, or private equity placements as well. So wherever the fundraising activities are required, generally investors and the investee asks for the valuation to the right valuation so that the right price can be paid for that transaction. Second category is regulatory purpose. RBI, FEMA. So whenever the non-resident is acquiring certain stake in a resident company like in India, or if there is change of shareholding pattern from resident to non-resident or vice versa, we require a valuation in FEMA RBI purpose. Income tax, we all know in Rule 11 UA, we need a valuation of a company. In Companies Act under Section 247, so Companies Act has mandated to have a valuation of a registered valuer in case of fresh issue of equity shares. In SEBI, in fairness opinion or maybe delisting of shares, at that time valuations are required in SEBI. And IBC, a new age term, सब सुनते ही हैं. Different class of assets valuations are required, like plant and machinery, land and building, securities and financial assets. So different class of assets are required to be valued when a company goes into insolvency in under IBC rulings. Third category is financial reporting. Like in Ind AS, we require the valuation for fair value under Ind AS 113, or for impairment of assets under Ind AS 36. So in the financial reporting perspective as well, we require the valuation to be done for the assets and the company. And there are miscellaneous cases like family settlement, litigations, sweat equity. Sweat equity is a general term wherein if you are planning to hire a consultant in your company, or maybe in any other company where there's a consultant getting engaged, or some third person is getting engaged, where you need to give him equity stake in the company. At that time, sweat equity comes into picture. And intangible valuation, brand valuation, goodwill valuation. In such cases, we require valuations. So we discussed these terms, but citing it again, prices is equal to value under fair market conditions. Well, as we discussed, suppose if you are in a city of Mumbai or Surat or Bangalore, wherever you may be, so the value which you are getting from that product, like in our case of Bisleri bottle, and the price which you're going to pay is almost same. So because you will get the similar bottle or the similar kind of water in a different brand. So there's a concept of risk and risk-free rate of return. Risk-free rate of return, in simple terms, if I explain you, it's a government bond. There are government bonds available in the market. So these bonds are considered as risk-free. The returns which we get from these bonds are risk-free. And when we add, there are corporate bonds available as well, or there is equity dilution, everything. So any other returns which we get other than these government bonds does have the element of riskiness attached to it. This risk, if I classify, can be considered as liquidity risk or credit risk or interest risk. And every company itself has risk factors, which we call as unsystematic risk factors. So the company, every company has its own risk, which we term as unsystematic risk factors. And the value that we derive of a business, if it's a going concern, that is including of both tangible assets and intangible assets. Like suppose if we derive a valuation by DCF approach, we'll discuss DCF later, but the enterprise value that we derive by an approach, income approach, includes the valuation of tangible assets and the intangible assets. In fact, in market multiples or market approach methods as well, the valuation, the enterprise value that we derive is of both tangible and intangible assets. And equity value is what? Business enterprise value. So business enterprise value includes the value of both equity shareholders, all the security holders, I would summarize. So equity, debt shareholders, everyone who are the stakeholders in the company. And the value that we derive is the enterprise value. And if it gets reduced by debt, if we reduce the debt from the enterprise value, we get the equity value. Now, the equity value for the equity shareholders. This includes both equity shareholders and the preference shareholders as well. Now, coming to the next part, there's another terminology or concept I try to explain: levels of value. Levels of value can depend on your strategic decision making, the controls over the cash flows, or the liquidity. Now, suppose if we have valued a company by discounted cash flow, this DCF approach, and for the financial controlling basis, we have applied a value. If there's a strategic premium involved, I mean, if the purchaser, the acquirer, or the investor is getting a strategic decision making power, he might add certain premium to that, and he'll reduce the risk factor against that. So so if a strategic premium gets added, so the value of that company gets increased for him, and he gets the strategic control business. So this is strategic decision making. So we're talking about the levels wherein valuation can differ from in a similar case as well. Suppose if you're not getting the control, then the risk factor for you will be a little higher, and we need to discount for that. We need to add risk factor for that. So we add a discount for lack of controls. In case of companies, marketable securities, the listed entities, where we get the minority stakeholding in the company. So that is a different stage of valuation, and we need to discount for that factor. And suppose if you are acquiring a stake in a private limited company which is not listed, so we need to discount for the lack of marketability as well. So that means we need to add riskiness to our valuation, and we need to discount it by more return risk rates to reduce the value for that. So the valuation may be different at for a different purpose for a similar company or for a similar transaction, depending on what we are getting from that investment. I hope I am clear on this. Continuing with the previous levels of value, now the basis of value. There are three principles again in this: a fair value, participant-specific value, and liquidation value. So fair value is what? In an orderly transaction, where there are equal number of buyers and there are equal number of sellers, the value which is received for an asset, or if the liability is to be transferred, whatever the value that is derived is a fair value, because there's an orderly transaction and there are equal number of buyers and the sellers available. Second point is participant specific value. Now, if you are valuing a company or a transaction for which an investor or the acquirer has specific advantages of acquiring that company, like if he is creating any synergy. If I talk about some example, like in a textile industry, if there is a trader and if he's going to acquire a manufacturer of a machinery, then it will create a synergy because he can manufacture himself and sell off the product by trading it. So that creates a synergy. So there's a element of synergy in that. So that valuation or the price which he is going to pay for that company might be higher than a fair value. So that is participant specific value. And third is liquidation value. Now liquidation value is what? Liquidation value in a general way, when when the company is into liquidation or we need to sell an asset, which can be easily replaceable. At that time, the liquidation value is to be done, and liquidation value includes only the cost of assets, and it is being reduced by the cost of disposable as well. So liquidation, generally in case when the business gets terminated or the assets are to be liquidated, at that time we use the liquidation value. We'll come to the concept of cost approach in the later stage, and I'll explain you more about that. Now there's another term of relative valuation. As you can see, a classic example of orange and apple I have put in here. Like both are similar. Relative valuation, before entering into this example, so relative valuation is what when we're planning to compare a company or a transaction with a similar kind of transaction. So this is what the example of orange and apple comes in. Like if we're trying to value a company by relative valuation, like there are similarities between this orange and apple. Like both are fruits, both are of almost same weight. Both have acidic factor. Orange might have more acidic factor. Apple has less acidic factor. Both are similar in shape. So these are kind of similarities. And if we talk about the differences, then this is is in orange color and another is in red color. The shape of apple is little bit different from the shape of orange. So in relative valuation as well, when we are valuing a company, in that case, if we try to find out the comparables, then we try to look at EV upon EBITDA multiple, price upon earning ratios, PB ratios, PS ratios. So there are multiple ratios available, and we try to compare similar size company or the similar multiple company with the company which you are valuing, and try to put up a valuation for the company which you are trying to value. So these data might be available in public domain of the listed or quoted shares. And sometimes if these are not available, then there are databases to find out wherein you can find these multiples. So this is what is relative valuation all about. Now coming to the second part of the presentation. So there are various approaches in valuation. I'll try to brief you about the different approaches. So practically there are only 3 approaches, and there are various methodologies to value under these approaches. In universe at global level, there are only 3 approaches, and there cannot be 4th approach. Income approach, market approach, and cost approach. Now, when we take the market approach first, market approach, as we discussed in relative valuation, considers the ratios to be used in valuing a company. There are again 2 methodologies: a comparable companies multiple or comparable transaction multiple. As we discussed, the ratios are to be evaluated in each and every case, and look for the similarities where the similar companies can be used for the valuation. Or like in comparable companies multiple method, or it is also known as guideline public company method. In this case, we try to take the quoted equity shares, or in simple terms, the entities which are listed or the companies which are listed. We try to take the ratios of that company, or the various factors like EBITDA, profit after tax, sales, book value, EBIT. So we try to take, or we try to find out the companies which are of similar nature or have the similar ratios, and we try to put up the multiple for that use multiple of that company and put up in our valuation scenarios so that we can value our company. So this is a comparable company method, wherein in general case we use the details of the listed entities. Now, in comparable transaction multiple method, also known as guideline transaction method, we try to value an asset based on a transaction that has happened in the past, maybe in the same company or maybe in a different company. Like suppose a similar kind of company has been acquired for say about 40 crores, then 40 crore ka valuation, if and we try to put that transaction and value our company in a similar fashion. And if required, we add a discount for lack of marketability or maybe some other discounts or factors as well. But generally, the transaction multiple happens if the similar transaction has happened in a similar kind of industry in some past date. Coming to the second approach, and one of the most important approaches, income approach. In income approach, there are various methods: discounted cash flow, relief from royalty, multi-period earnings method, with and without method, option pricing. But discounted cash flow has more weightage. Others are used for valuing intangible assets, but discounted cash flow is generally used to measure a company, to measure the enterprise value of a company. Now, what does it consider? Discounted cash flow, if I deep dive more into that, so generally we take the future cash flows of the company, say suppose 5 years, 7 years, or 10 years, whatever it may be, we take the future cash flows of the company. Now by cash flows, I mean whatever the revenue the company has, less whatever the expenses, adjusting the factors of depreciation, interest, income tax, capital expenditure, whatever the net cash flow we get, the free cash flow that we get, are used in the discounting cash flow model to discount and to derive a value. So I've tried to highlight the various terminologies here. So cash flow is what the operating financing and investment cash flows. The free cash flows, the point number 6 in this case, the way that we discussed, reducing all the expenses, adjusting it with interest, depreciation, taxation, income tax, capital expenditure, the net cash flows that we get for a particular financial year is free cash flow. Second is discount rate. Now, whatever free cash flow that we have derived, we discount we call these as future cash flows. Now, we discount these future cash flows with a particular discount rate. Now, this discount rate is arrived by a WACC procedure. So, the seventh number point, weighted average cost of capital. We derive the discount rate by weighted average cost of capital method, or there are different methods wherein we use the KPM model for equity and for debt, and we derive a combined discounting factor or the riskiness of that company to discount it to the present value. Present value. Third point is present value. The present value is the whatever the value that we get after discounting it with the WACC or discount rate of the future cash flow is the present value. The fourth comes the net present value. Net present value is the summation of all the future cash flows, like year 1, year 2, year 3, year 4, year 5, whatever years that we have considered. The summation of all the cash flows, maybe positive or negative, is what is the net present value when discounted to the current financial year. Terminal value, again an important term. So we assume or we predict that the business is going to be a going concern in valuation. If we are predicting that the company is going to be a going concern, then in that case, we use the terminal value concept, wherein we try to predict the value of a company till infinity by using Gordon's model. There are different 3-stage model. So there are various models to derive that. But for that, we derive a terminal value, and that terminal value is added after discounting to the present cash flows. Maybe if suppose after 5 years of projections, we have considered a terminal value. like for till infinity. Now that terminal value is being added after discounting. We discount it with the current discount rate and add it to the uh, present value of all the free cash flows. So that becomes the terminal value plus all the free cash flows addition will become the enterprise value. The last point. The enterprise value is what? The final outcome of the valuation of both equity stakeholders and the debt stakeholders. Uh, Now, if we reduce the debt component from the enterprise value, we get the equity value. I hope I'm clear on this points.
Yes, sir, you are clear. Please proceed.
Now comes the intangible asset valuation methods, relief from royalty method. So in this case, we tried to put up the valuation like generally this case is used in trademarks or license, wherein we tried to derive a value considering the royalty. Suppose if we had that royalty or we know how to we had that trademark in our company and we value that company, and suppose if we had to pay for that trademark or for the license, then how much royalty fees we might pay uh, till its finite number of years. Like suppose if the royalty period is of 10 years, then if if we pay for that royalty, say suppose 1 lakh rupees a year, so we might end up paying 12 lakh rupees, or sorry, 10 lakh rupees in 10 years, and when discounted it to the present value, so that difference or that value, if in case the royalty would have been in-house, the difference of both the cash flows in the present value is considered to be the royalty method of valuation, and we term it as relief from royalty method. Multi-period excess earning method, more or less of similar kind. We try to estimate the future cash flows of the company based on the intangible asset. अगर वो intangible asset है in that company, and if it is not there, then what will the difference in that? Suppose for example, in a snack industry, if I say if there's a particular snacking which without a label or without a brand might cost you rupees 50, and with the brand logo on it, it might cost you rupees 100. So this 50 rupees becomes an intangible value. Now, how long that brand is going to be beneficial, maybe infinity or maybe 10 years, we try to factor that excess earning and bring it to the present value. That becomes a multi-period excess earning method. The third is with and without method. Again, so of the similar kind, wherein we try to value in time, considering the business cash flows, including intangible assets and without the intangible assets. The difference between that becomes the value of that intangible asset. Now the fourth comes as the option pricing, like ESOPs or the sweat equity, wherein there's an option attached to the share, or when we try to value an option. So this becomes an option pricing model. Majorly two methods are there in this, Black-Scholes and binomial. There is Black-Scholes and Merton method as well, but primarily these two methods are used to do an option pricing model. Various factors that to be considered in this model are the strike price or the current price, the exercise price, life of the option, like how the option is going to be valid. Like in suppose we take an example of ESOPs, how long you can maybe 4 years, 3 years, the vesting rights that we need to define. The volatility, how much the share price is going to be volatile during that period, the dividend yield, and the risk-free rate of interest. So these are the 6 components that are required to do an option pricing model. Now we come to the third approach, that is cost approach. Cost approach is basically generally used when there is a liquidation happening when the assets or when the company is in the liquidation process, or if the assets are can be easily replaced, or if DCF, I mean income approach or market approach, cannot be used that easily. At that time, we use the cost approach. It has two methods: reproduction cost and the replacement cost. Reproduction cost means the cost to reproduce that asset. Uh, Suppose if you are planning to discard that asset, and then how long it will take and how much it will cost us to reproduce that asset. That is reproduction cost method. And another comes is the replacement cost method. Uh, Suppose if you are planning to discard an asset, then of this that asset of the similar kind, at what rate in the market is available to us, that becomes the replacement cost of that asset. So this is the cost approach. I mean, so these were the three different approaches, and there are various other methodologies involved in valuation. But uh, if I talk about the approach, these are the only three approaches: that is cost approach, income approach, and the market approach that can be used in the business valuation. So coming to the end of my presentation, if I talk about valuation in my language, it's kind of dating. I mean, एक dating की तरह है. Can be a very rosy valuations of the rosy pictures, the rosy figures can be there, but the substance, the core has to be seen very thoroughly. What discounting rate or what the terminal value, what factors, what qualitative factors are being used in valuation, and how substantive are those factors backed with the facts of the figures. So that has to be considered in valuation and not just the rosy picture. Thank you. Thank you very much. That's all from my side.
Thank you, sir. Thank you so much. It was really very nice to hear about the business valuations and your practical approach, and you enlightened us regarding this topic. Thank you so much. The questions we'll take up at the end. As of now, let me introduce our second speaker. Let us move towards the second session of this webinar. Dear friends, as you know, that MSME sector has been an underrated child of the Indian economy, but as per the current government's initiative and incentives to the MSME sector, it is contributing immensely to the GDP of the nation. So to further elaborate on the role of a chartered accountant in the MSME sector, I welcome our second speaker, Mr. Nitin. Ladies and gentlemen, see Nitin Mehta. He's a trained civil lawyer who handles matters related to land, money recovery, corporate law, including mergers and acquisitions. He has also specialty in intellectual property rights and commercial arbitrations. He has been appointed as the youngest senior standing counsel by CBDT to represent Income Tax Department in Gujarat High Court. Dear sir, we welcome you to the webinar. Please carry on. Over to you, sir. Nitin sir, over to you.
Yeah. Hope I'm audible.
Yes, sir, you are audible.
Yeah. So I thank you for having me over with this entire enlightened bunch of chartered accountants. Uh, this is a monologue. This is going to be a monologue in that sense, at least for some time, and possibly I await my chance of learning from you all during the question answer session. I will only start with respect to what Steve Jobs once said. Great things in the business are never done alone, but with the team of people. I can only say that CAs are that team for MSME which can turn challenges into opportunities and dreams into realities. Now, let me justify why I say so. I may now share the screen for my PPT presentation. Uh, yes, so hopefully it is visible.
Yes, sir, it is visible.
Yes. Now, why CAs would be a catalyst in the legal and financial resilience and recovery of MSME is something which we will understand in next 40-45 minutes. Now, first, to understand why MSME and why are we holding this particular seminar 4 o'clock on a weekday is because of the immense contribution which MSME has made to our country. Just to have some figures before you, the GDP growth around 30% is contributed by MSME. They manufacture around 6,000 numbers of different products. Their manufacturing output is approximately around 45%. Their exports are in between 40 to 48%, and they employ around 12 crores uh, of the employed citizens of our country.
No, sir. Nitin, sir, please check your audio. Manish, can you rejoin? Nitin, sir, are we audible to you? Please rejoin the meeting.
He's just rejoining, Rana. There's some technical glitch going on.
Okay.
He's rejoining. I
Ladies and
just had a
gentlemen,
word with him.
we apologize for this technical glitch happening in between the meeting. It will soon restart. No, sir, you are not audible. There are approximately 980 members who are live with us on this webinar. And I apologize on behalf of CPE committee for this technical glitch happening. We will soon sort it out and we will continue the session with Nitin sir.
Am I audible now?
Yes, yes, sir, you are audible.
Oh, I'm extremely. I'm extremely sorry for the inconvenience. Uh, we had tested that particular system, but I don't know. Am I audible now?
Yes, sir, you are perfectly audible. Please continue.
Extremely sorry, everyone. I'll just try to share my screen and start. So I was just going through the importance of the chartered accountants in the MSME sector, and also highlighted how and why the MSME sector is so pivotal to our economy. Uh, so, is it? Yeah. The slideshow is visible on the screen?
Yes, sir, visible.
Yeah. Okay. So, this is the kind of contribution MSME has. Now, what does the chartered accountant have to? Okay. So, this is your statement of ICI on its website. How does it believe it plays an important role in MSME sector with respect to the chartered accountants? So they say that you are a trusted financial advisor and provide services like project financing, management, budgetary financing, modeling, all these which you are very good at, and therefore I'm not entering into any of these fields at all. I would be looking at from the perspective of probably like an NRI who will be seeing the country grow from outside, though it will not be any tangible benefit to him, but the kind of role the chartered accountant would play, I am looking it from the legalistic perspective, that what is the legal requirement of MSME and how do the chartered accountants play a catalyst role while providing and satisfying the such legal requirements of MSME. So I've divided into 4 categories broadly. First is the structuring services. Second is one-time licensing and work and registration services. Third is periodic compliances, and fourth is stakeholder services. Now, structuring services, as you are aware, any organization or any client of yours who comes to you has essentially 4 roles, or is in a particular stage of its business cycle. It may be a startup, or it will be starting up, it will be beginning, or it has achieved a level where it is expanding its existing projects, or for that matter geographical reach. And third is diversifying into new particular products or new business lines. Once you understand that the stage at which your client, which is an MSME, is, you will have to help him plan a model and a business plan according to his long-term perspective and the kind of market which he is wanting to reach. So the first point which has to be considered is your advice as to its legal status and the kind of organization which it would want to have. So as we all know, various forms, maybe proprietorship, partnership, LLP, company, or many other such, be it in HUF, he'll be doing business in HUF. So multiple status of the organization can be there, which you will have to advise him based on various parameters, tax, his long-term plans, the other partners involved, the kind of liability and the risk which a particular industry will entail upon. So more the risk, it would be better for a thing like a limited liability, like a LLP, or for that matter, company. And then the strategy to run around it. For example, the legal requirement of taxation. If it is an individual HUF, you have certain benefits under Income Tax Act, under 44AB, AD, AB, TDS provisions are relaxed for individuals and HUF. Partnerships will again have 44AD, presumptive taxation will be available, but that the same will not be available for a company. So these are the parameters which you'll have to consider. Now we come to the second limb of the service category of services, which is one-time licensing and registration services, which includes various kinds of registration, but that is one-time registration, maybe a tax registration, GST number, PAN number, IPR registrations, labor laws registrations, manufacturing licenses, most importantly, a MSME registration. And there are almost 132 license and registrations which may be required depending upon the nature of the business of your client, of that particular MSME. So here, missing out one would be fatal for him, both in terms of statutory penalty and at time criminal proceedings, or maybe commercially suicidal for him. I'll just share one example. So there was this client who actually was originally registered as an SSI uh, in its original avatar way back in 94, 95. But with the new act of 2006 which came up, which required a fresh registration. He was not aware about it. And believe me, his around 90 crores is on stake because of not being advised to re-register himself under the new act. So such things are very, very important and can provide can be a kind of a life and death for a particular MSME. Then is periodic compliances, which you all are so well aware about, especially the tax compliance, direct, indirect, then labor laws, there are environmental laws, there are corporate laws, there are FEMA, SEBI, and RBI. So essentially, periodic compliances, I am dividing it into two categories. One is statutory, and second is contractual. Now, just to give you example of a contractual compliance, there are multiple contracts long term which are entered from. For example, there was one client of ours who entered into a franchise agreement and had an all India franchise of a very, very big brand. So he developed the business for them for 10 years, popularized the brand in India. And eventually in the 11th year, the brand thought that we should diversify and not stick to only one all India franchise. So they found out a very small two-letter clause in the agreement, which provided for the MSME to actually provide for the balance sheets to be supplied over the years after they are filed with the respective tax authorities or the statutory authorities to the principal. So all what was required to be done was that a balance sheet once finalized was to be couriered to the principal. Now he received a contract, he received a notice from the principal with respect to the breach of the condition, and his franchise was terminated because of that breach, which was recurring in nature. Because after executing the contract, the MSME never looked at that again. So therefore, this is just one example where the contracts will have to be looked at as one of the services provided by CAs who will prepare do's and don'ts, or a checklist which has to be regularly followed by the client for his own benefit. Then comes direct, indirect, which you all are aware about. Then these are the labor laws compliances which are required, which are statutory and have both penal provisions in terms of huge penalties and in terms of criminal actions also initiated against the employer or the occupier, as they say under the act, which is so very important for you to advise an MSME who can be a one-man army for his own business. Or even if it is a multi people driven organization, not necessarily they are aware about each and every laws. These are environmental law opportunities, which in fact ICAI website has put across for the chartered accountants to look at and maybe develop a practice on certification work. Next is the stakeholder services, which is the last category. If you look at the organization structure of any for that matter, any client of yours, you will see that there are 5 stakeholders. First being the promoter, second being the employee, third being the customers or a debtor, fourth being a vendor, and fifth being a financer. Now, in each of these categories, actually, there can be much guidance and services value added, which can be provided by the chartered accountants. Like, again, I am restricting myself to the legal implications in all these categories. For example, the promoter, the first thing any promoter or any organization will do is come to a chartered accountant to either prepare a MA or memorandum of article or the incorporation document, be it partnership deed or MA or AA. So gone are the days, sir, when there was a copy paste done, whereby you had a pro forma MA or AA available to you, or a partnership agreement which was available to you, which you would just with change of few names. It has been almost 100 years since our Companies Act has been prevalent. There are lot many clauses of article and memorandums which have been tested in the court, which have been interpreted, and that interpretation needs to be understood by the chartered accountants, and accordingly the clauses needs to be modified then the in comparison to the pro forma invoices. I have come across most of the partnership uh, deeds are drafted by chartered accountants with a perspective of income tax, planning their interest, remuneration, and profit accordingly. But this is a document where the marriage is happening, and the sustenance of the marriage is completely dependent upon the incorporation document, like a partnership, which must contain do's and don'ts, which must contains the broad corners within which the partners will have to act their responsibility in everything. There may be a clause of arbitration in that. There may be a clause of dispute resolution in any which other way. So all these things are so very important, which will help the promoters to look at the time of their inconvenience or at the time of any dispute. Just giving a very quick example, there was a case which there was one client of ours who came to us for an advice with respect to a 20 years old partnership firm. Our first question is, how is your partnership doing very badly? He said no, it is making huge profit, and every year we are making a compounded profit of 10% and above. Then obviously the question, what is the problem? The problem between the two partners was that one partner was anticipating a huge jump in sales and profits, and therefore wanted a huge investment to be made, while the second partner was not as optimistic, or would say that he was more conservative and wanted a conservative approach, which with less expansion and less investment in the partnership, and he would want to uh, bifurcate the entire investment over the years. This, in a running concern, making profit, ended up in a dispute between the partners. When we looked at the partnership deed, it contained nothing with respect to the kind of investments, the kind of who will prevail when such disputes would arise, what would be the percentage, and so on and so forth, of the sharing of profits if there is an uneven capital investment, so on and so forth. Now, second comes with respect to employees. So, with respect to employees, we today are facing every day. Again, I'll give you an example which we have come across. So there was this client of ours who had come rushing, saying to us that, sir, this I need to file a immediate injunction against one of our employees. That is this employee who was just graduated from a small city of India. He was brought into the firm. He was taught everything about a particular Japan and South Korean region. He did not even have a passport. The passport was made. Everything was taught to him with respect to the markets, with respect to the products of this client of ours. And after 5-6 years of employment, he is now going out of the organization, joining a competitor with all the data from our client. Now, it will completely destroy my client's business if this employee succeeds in taking away the data and all of that. So the simple queries which we pose, that what are the documents to evidencing what you are just saying, that everything with what you were saying, what is the evidence? He did not even have the simplest of the document like appointment letter. Forget the terms, forget the do's and don'ts, forget evidencing the steps or kind of training which has been given to the employee with respect to all this. It took us 1 month to actually put the house in order before we could file an injunction, and by that time a lot was lost. So again, service level agreements, helping the MSMEs to provide do's and don'ts, to provide proper appointment letters, proper termination letters, agreements, non-compete clauses, is something which you can always advise in terms of employees who are a very important stakeholders. Now, with respect to customers, I believe CS are the king, in the sense that no professional can advise better to a client, an MSME, than the CAs with respect to the customers. Right from, in fact, drafting a invoice. I am sure in our old times we used to have that green pen which we used to use to tick mark various things, tally the ledger, which nowadays are not there, I'm told. But invoices are so basic in any of your audits. But I am sorry to say that multiple times we come across invoices which are badly drafted, which do not contain the terms properly, which do not depict the jurisdiction, we do not depict that there may be an interest which is chargeable, they do not depict the credit period which will be available. And therefore, your first job with client is to, with respect to the customers, is starts from proper drafting of the invoice. Second, obviously, setting the entire system of proper purchase order, proper delivery challan, drafting the delivery challan, which is also very important. Today, with GST, it has been replaced by online. But again, that also adds up to your responsibility, because the poor MSME is absolutely unaware about all these aspects, especially when it comes to the portal of GST, and therefore is much dependent upon you. So right from invoice, then comes the debtors. When the customer, I believe, in even today's time, there's an aging schedule of debtors which you take from the client. So immediately when you see a debtor is outstanding since 6 months, your antenna should really go out. And it is time for you to inquire from your client as to why it is outstanding since so long, what are the reasons, whether any steps have been taken for him to ensure that the recovery happens, if there is any legal steps which is required to be taken, what are the kind of correspondence which have been undertaken by your client with respect to these debtors. All these are so very important and are the basis for any successful litigation, if at all in future it so happens, for recovery of these amounts. Now let me shift to the creditors. One of the biggest problem with respect to creditors is the scope of work. When a creditor, in the sense of supplier or vendor, is hired, then the scope of work, the kind of specifications which are required in a purchase order given by your client to someone else, or a scope of work which has been drafted, or a work order which is given, is so vague that the expectations are very difficult to meet between both the supplier and the buyer, and it entails to a lot of litigation eventually. This is so true with respect to the services, where obviously the goods are undefined, they're not specified, they're services which are all intangible in nature in that sense, and the expectations run high, while at the same time the supplier or the vendor or the service provider is having a complete different interpretation of the scope of work, and leads to a lot of litigation. This is also very important in case of tendering work, where tenders have to be interpreted and a subcontract or a sub-tender will have to be done. For example, there are huge infrastructure companies like L&T and so who bid for 1,000 crores of a tender, but then they, and which for a tender document which runs somewhere into 500 pages and so on. But then they subcontract that 1,000 crore contract into maybe 20-25 crores of subcontracting to MSMEs. Now, it can be either two ways. The MSME can be levied with all the liability in that 500 pages of contract, which poor MSME has never read. And what all he has is 2 pages of work contract, which he signs from a big company. So you will have to understand and make that MSME understand that the scope of his liability under a work order which he is getting, and accordingly probably correspond with the ultimate customers of his or ultimate supplier of theirs, with respect to what would be the scope and what would be the legal liability, as well as the checkpoints in terms of the dates on which certain work has to be achieved. So there again, chartered accountants play a pivotal role. Now, financiers, being the last stakeholder, uh, least said the better. I think you all are very well versed with it. But what we have seen in our experience is that a client has all the assets in the world to be able to get the finance. But when it actually comes to getting a finance, the documents are not in order. He has a huge chunk of land which he has bought, but the land is not in his name or not in the name of the organization. It cannot be given as a collateral. Uh, there may be a family dispute running with respect to a particular asset, which is to be given as collateral, or for that matter, it may have uh, multiple family members as owners, which may not be documented properly. So all these things uh, is very important for getting a quick finance, quick and easy finance, and also at a good rate. I believe you all are brilliant at financing and arranging financing for MSMEs, but I am with respect to the documentation with respect to that. Again, we see a lot of today in global trade, LCs, bank guarantees. These are common instruments which are actually used by businessmen to do their daily transactions, where uh, probably an MSME signs on the dotted line without understanding the implications of the same, without understanding the terms of the same. Therefore, it is the chartered accountants who should enter into advisory role to interpret and make the client understand with respect to the risk which he is entering into, and probably advise him to negotiate the change in certain clauses of such bank guarantees, such LCs, and so and so forth instruments. With this, I now turn to the essential elements which have been listed as to why there have been closure of small sector units. If you see, this is very, very important. If you see the problem, only once you identify the problem, you can find a solution to the same. So the biggest problem is financial problem. Second is marketing, raw material. Disputes among the owners are around 3.7%, where there has been a closure. Labor problems, and a combination of all these. So I would believe a financial problem, marketing problem, I understand is may not lie in your domain, but financial disputes among the owners, labor problem in terms of settling with the labor or negotiating with the labor unions and getting a settlement agreement done, are coming in absolute practice area of the chartered accountants. Now, I would here try to now focus on with respect to the financial problem, and also a very small area of the financial problem, which is that out of these 34.7%, a huge chunk of MSMEs have gone into a closure because of their inability to recover amount from their debtors. So once they have used debtors, unable to recover money, liquidate them, and therefore unable to pay their creditors or pay bank loans for that matter. Especially this is so true in infrastructure companies. So I will try to concentrate now as to what you all can do for recovering the amount which an MSME is liable to receive. So these are the four forums. These are 5 forums within which a recovery can take place. First is a commercial suit. There's a separate commercial act which has been promulgated by the present dispensation, which expedites all other past. If it's a commercial suit, if it's a commercial dispute, it expedites the entire process of a ordinary court. And commercial courts have been set up in almost all jurisdictions, which have pecuniary limit above which it will come in that court. They are designated judges who understand matters commercially and are equipped to deal with them expeditiously. Second is arbitrations, which you all would understand that arbitrations are only possible if there is a clause of arbitration in an agreement. Generally speaking, in terms of everyday invoicing, there is no arbitration clause, and therefore this is only in terms of such bigger contracts which an MSME or a client will enter into. Third is the most important and very unique, which is MSME Act and reference under that particular act for recovery of the dues of your client. Fourth is, yes, NCLT. We'll come to that also. In NCLT, if your debt is more than 1 crore rupees, then only you are, as an MSME, you will be able to file an NCLT proceedings against a corporate debtor, and restricted to the debtor who's a corporate only. And lastly, finally, is that if nothing works, then it's a regular summary suit which you will have to file in a civil court, which even today takes ages. So let me concentrate right now and take you on the MSME Act and how chartered accountants can play a very important role. So there are till 2022 almost 66 lakhs unit were registered in that Udyam portal, out of which maximum were micro, very minimal were small, and minuscule were medium enterprises. And therefore you see how big is this MSME sector. Now, with all of them registered, so first advice would be to ask them to register on this Udyam portal, which is very simple. There are multiple benefits which for the shortage of time, I may not right now take you through. But I would say that all other benefits of registration is on one side, and the other side is simply the ability for the MSME to recover their dues from their debtors, or for the matter from their buyers expeditiously and with a very high interest rate, which will come to. So various benefits available just because of one registration under MSME. So earlier there were multiple registrations in various forums which were required, but today, thanks to ease of doing business, this one registration entitles you to subsidy schemes, to priority funding, to various grants of the government, and so on and so forth. Now, very simple to register. There are very few documents which are required, which are very easily one can understand while one goes to the portal, which in fact chartered accountants should take on them, that equally once they file a M&A or they incorporate a company, or for that matter partnership deed, they must advise equally quickly that the particular client should get registered under MSME. Now, who can get registered an MSME? A micro. So MSME is for micro, small, medium enterprise. So micro would be who has investment. So the criteria to find out who would be under this category is twofold. One is the plant and investment criteria, and second is the turnover criteria. So if an investment is less than a crore, equal or less than a crore, and also the turnover is 5 crores or less, then you will be considered as micro. With respect to small, the investment in plant and machinery will be 10 crores and turnover would be 50 crores. Medium would be 50 crores in as an investment and 250 crores as a turnover. So this, as you see on the slide, the old definition had very small limits, and most of today's business and turnovers would be beyond these particular definitions, and therefore therefore in this particular definitions were amended under the new act. Now, how do you figure out that if suppose you have 2-3 units, then what each unit will be considered separately? The guidance has come in form of clarification, which says that uh, which goes on the basis of GSTN number. If you have one GST number based on the permanent account number, then all such units will be collectively considered cumulatively, and their aggregate value of investment and turnover will be considered to find out the category in which they fall. Now, what as investments have to be in plant and machinery and equipment. So how do you calculate the value of plant and machinery? In old act, or in fact in the new act in 2006 also, uh, there was this circular. The act does not define how do you compute the plant and machinery, but there was a clarification which was given that earlier the computation of investment in plant and machinery was to be based on the purchase value, or for that matter the cost of a plant and machine. So as we all know, the depreciation, there will be there will be a huge depreciation which will take place, but the cost will not come down. The historical cost will never come down, and therefore, because of additions of plant and machinery, many of the enterprises went outside the scope of MSME, because though their machines were old and depreciated, they added new machineries, but it was not the WDV, but it was the historical cost which was considered. This thing was rectified in 2020 by a clarification which said that now it is the block, or it is the block of plant and machinery as per the income tax rules, which will be considered for purposes of determining the investment value. So if it's a new undertaking which has no past record or history, then it will be based on self-declaration as to the value of plant and machinery, which will entitle it to register itself as MSME. And for anyone else, automatically the figures uh, of the slab of income tax with respect to plant and machine will be taken by the portal. The portal will directly link itself to the uh, PAN number, and will automatically compute the value of plant and machinery and categorize the unit as either micro, medium, or small. uh, Now, this will happen automatically. With respect to the turnover, this will be based on the turnover which you show in the GSTIN return on the portal, and it will automatically take, except for the first year, where obviously there is no past record, and this will be taken off the previous year. Uh, a very important question was that today, any trader, any retailer would fall under the category of MSME. Earlier, this was not permitted, as it was only a manufacturer or a service provider which could avail MSME benefits. But in 2021, this particular circular came, by which a wholesaler and a retail trader was also entitled to MSME benefit in terms of registration of it, but the benefit was limited to priority sector lending only. Now, there are interpretations to the effect that could it could a retailer or a wholesale trader take the entire benefit of the MSME Act in terms of Section 17, 18, 19, which will come, or it is only with respect to. There are two interpretations to it, not entering into it, but it's a debatable area because of the definition which will just come. Okay, so just as traders, a chartered accountant, which is a firm and not an individual practitioner. So it has to be enterprise. It is MSME, enterprise. So an individual may not be considered as an enterprise, and therefore enterprise will be entitled, even if a CA firm will be entitled to register itself as MSME. Now, buyers, whether location of buyer is immaterial, in the sense that even if the buyer is unregistered, even if the buyer is not an MSME, it hardly matters for the benefits to be taken. So the only definition of buyer is that he should buy goods and services from a supplier for consideration. Now, what is a supplier is defined in 2N, which is very important definition, which has, if you see, it is both a definition which is inclusive and has means also. So it has four limbs of to the definition. There are various judgments on these issues with respect to whether the issue came that who will be a supplier, because being a supplier, if you see that he has to file a memorandum under Section 8(1) of MSME Act. So MSME Act, we immediately come to what MSME Act. Section 8 is a memorandum which states about memorandum, gives details with respect to registration on the portal. That is what a memorandum is all about. So question is, only if someone registers would he be a supplier, or someone who otherwise qualifies for an MSME in terms of turnover investment criteria but not registered will still be termed as a supplier. So there were sets of judgments right from GT Limited of Delhi, and various multiple judgments which actually held that registration under 8, Section 8, is not necessary for an MSME to be considered as a supplier. It is not mandatory. It uses the word may. It is not. It is only recommendatory in nature. And if he does it, then he will get certain benefits. But that doesn't mean that if he does not get it, he ceases to be an MSI. He still continues to be an MSME. He continues to be a supplier. That was interpretation given by many judgments. So uh, uh, in Ramki, the Delhi High Court held that the definition has 4 categories and is exhaustive, and it's not necessary for such entities to have filed a memorandum under Section 8(1). And so was the view of Andhra Pradesh High Court. But Bombay High Court differed. Bombay High Court said that the registration will not give you a retrospective application, and therefore the benefit cannot be taken by someone, by a MSME, when he is not registered. So a contract entered when an MSME was not registered under the Act will not be considered as a supplier under Section 2L. So there were multiple disputing judgments whereby finally, again, I may not say finally, but there is this judgment of Shilpi Industries by Supreme Court and Gujarat State Civil Supplies Corporation, which of Supreme Court, which in that sense has concluded the issue to the limited extent, stating that it is only upon registration that the benefit under the Act will be available. So if you are an MSME, though you are an MSME, but if not registered, then you will not get, and only after the date of registration will you get the benefit. Now the issues arise that what will be the date? Suppose if I got a contract on 1st January 2022 and I get registered myself on let's say 31st December 2022. So, and still continue to supply goods till 6 more months. So whether for the supplies made for that entire year when I was unregistered, though when the conclusion of the contract was there, I was registered, what would happen? Would I be able to claim the benefit of the supplies made prior to the date of registration or only post thereafter? There are multiple issues. The date of registration has to be calculated on the date of contract, or on the provision of services, or on the provision of supply of or on the raising of invoices, or possibly on the date of dispute arising, or on the date on which I may want to avail or file certain references which will come to under the Act. So there are multiple dates. Things are not clear. But however, today the last word is what Supreme Court says is that prior to the date of registration, you can't take. Which is the date is something which we'll have to still debate upon. So there are, because of the paucity of time, I will quickly not go deep into it, but just take you to the integrities of the particular Act, except to the extent that Section 8, Section 15, 16 is where the entire MSME Act has been promulgated to ensure that there is a quick recovery and payment made to MSMEs by all these big individuals. So big corporations, which would take the MSMEs to a ride, and because of a very shallow financing which MSME has, it may end up into a closure and create unemployment situation. So Section 15 says that it is liable for every buyer to pay an MSME within 45 days. So even if your contract states that the credit period available is, let's say, 60 days, but Section 15 says that the credit period has to be 45 days. If in the contract it is less, then obviously less, but it can't be greater than 45 days. Post from the 46th date, the interest component starts and the act comes into play. So interest, the best part of the entire act is section 16, which says that if you are unable to pay on, if you are unable to pay within the time stipulated, then the buyer will have to pay at the compound interest with monthly rest 3 times of the bank rate, which almost comes anything between 20 to 25% in depending upon the fluctuation of the bank rate in last 3-4 years. So this is a statutory interest. It is not a contractual interest. Your contract may have no interest clause. Still, under section 16, statutorily, the buyer is bound to pay an MSME supplier interest at this high a rate. Now, how do you recover? So buyer shall be liable to pay the amount with interest. 18 is where the mechanism is provided to recover the principal as well as the interest, is where there's a reference which has to be made to this council, who will first conciliate between the parties. And if the conciliation fails, then under section 19, it will uh, it will uh, refer the matter for arbitration. Now, arbitration reference can be the appointment of arbitrator, and reference could be on its own, or it could give to any institution, or it could give to an institution like Institute of Chartered Accountants. I have from all the platforms voicing my request to the institute to register itself under section 19 with various MSME councils, setting up an arbitration reference council wing in ICI, by which under section 19 such matters can be referred to Institute Chartered Accountants, who then can have its own rules for the procedure governing the arbitration, as well as right to appoint arbitrators, which can also be chartered accountants. After all, this is a commercial dispute which is best understood by chartered accountants, other than obviously the MSME himself. So section 19, once the conciliation fails and arbitration is evoked, award is received under section 19, which is again very beautifully crafted to say this, that a award can only be challenged by a buyer only if he pays 75% of the awarded amount. And therefore, it unlike a typical litigation which extends over multiple years, this would really be only with respect to the amount will be received by the supplier, the MSME, and therefore his business will not be hampered. Again, the definition 23, section 23 for CSR material, because the interest paid under MSME will not qualify as a deduction under Income Tax Act, which is, you can understand, 20 to 25%. And if the amount due is over 2-3 years, it possibly is interest is equal to the amount of debt, overriding effect. Then quickly, how much time do I have, ma'am?
So we are already done with this.
Another 5 minutes?
Yeah, sure. Continue.
Okay. So this is MSME Act. So next way of recovery of your dues for MSME is Insolvency and Bankruptcy Code. If above 1 crore, you can file as an operating creditor under section application under section 9, where the debtor is a corporate, and you can recover. You can have multiple process can go to NCLT. Even chartered accountants are entitled to appear before NCLT, and it's a big practice area. today IPs, our insolvency professionals are appointed who will take over the management of the corporate data, run the show, and possibly liquidate the assets and provide the amount to MSME. As an MSME, you don't want this to happen. It is a very good way to bring the debtor on table to negotiate. And again, there is where chartered accountant plays a pivotal role to help the client negotiate and not to prefix him with the exact amount of debt and interest which he is entitled to. So last is where the MSME itself is under financial duress, where pre-packaged insolvency process, which is again provided under the IBC Act, IBC code, is of immense importance. It is a subject in itself, but I can only leave you with a glimpse of. I can only leave you with the with an example. Say that banks are more than happy for getting into this pre-packaged insolvency process, because this is best of both the worlds. Bank get what they want, and the promoter or the MSME really gets the time period and a statutory impromptu for a OTS kind of a proposal, or for a financial proposal which he is willing to comply with over a particular period. It requires 75% of stakeholders, 66% of financial creditors in value. And finally, the Contract Act is something which again is something which is very material, on which you can advise on agreements. And finally, if it's a bank loan, then your client or MSME would be facing music under RDB Act or Securitization Act, where again you will play a pivotal role in advising them with respect to correspondence, with calculating the claim, falsifying the claim of the bank in terms of the calculation which they have done, and helping them or guiding them to the correct resource person like an advocate or any other person who can fight their case at a right time, before they have cut their hands and thrown it away, before they can defend themselves in a court of law. And finally is factoring regulation, which again is in itself, but I would probably uh, end up there. And thank you for a patient hearing. I will only end up by saying this, that as Mahatma Gandhi has said, that it is not only we who can act alone. It is a cumulative effort which is required. And today, the chartered accountants will have to really guide. And I think they are the backbone of this economy, and specifically MSME, who could not stand erect without the help of chartered accountants. And therefore, I really request you all to brush up the skills other than your audit and tax skills to help your clients, especially those who are MSME. Thank you.
Thank you so much, sir, for enriching us with MSME knowledge so deeply. Thank you so much. Here are a few questions from our members. First, Somil, sir, there are some questions for you. I would read it out for you. Out of the three approaches of valuation, how do we decide which approach is to be adopted while valuing a particular business? Somil, sir, over to you.
Right. So ideally, in this case, whenever the company is a going concern, first we talk about the income approach. So whenever the company is a going concern and limited availability of data is there, or if we say that the projections of the financial, the expectation of the group company, wherein the financials or the growth prospects are very high, at that time, it is always better to use a DCF approach, because it is kind of internal calculations, internal evaluation of the company by the promoters, where the business would stand. Uh, Market approach can be used at that time when the comparable data are easily available. When the similar companies in the market segment like quoted companies are easily available, and if we get the data for the multiples, at that time we can use the market approach. Simultaneously, both the approaches can be used to evaluate if both the data are available, and we can have a weighted average or average out both the approaches to arrive at a particular valuation. And for the cost approach, if I talk about, then cost approach is generally used when the company uh, is going to terminate its operation, or it is under the liquidation process. At that time, we use the cost approach, which is also known as asset approach method. Because in both market multiples and in income approach, we consider intangible assets as well. As I had said in my presentation, the EV, the enterprise value, considers both the net tangible assets as well as the intangible assets. While in cost
Okay.
approach,
Quickly taking up the next question, sir. What should be the ideal rate for DCF valuation? What should be the ideal rate for the DCF valuation, sir?
For the ideal DCF, first and foremost, the cash flows, the future cash flows of the company has to be determined very correctly. Then there are some subjective factors like terminal growth rate, the risk-free return, and the WACC, the cost of equity and debt. That is WACC has to be calculated or to be come at means it has to be derived in a very good manner to have a DCF calculation. Sorry, you are muted.
Okay. How to calculate the enterprise value of unlisted public company? Enterprise value.
Enterprise value, again, enterprise is both the equity and debt. So when we arrive the free cash flows, we arrive at the free cash flows of the firm. So that includes both the equity and the debt. We don't reduce the interest component. In that case, we calculate on the EBITDA perspective, and all the similar factors of terminal value, WACC, and risk-free rate of return has to be used to arrive at the enterprise value. Summation is all the present value of the net cash flows of the projected period.
Okay, thank you so much, sir. Few questions for Nitin, sir. Nitin, sir, benefits of bank loan for MSME, any concession in the service charges? Is there any concession in the service charges?
Not. It again depends upon each bank and their policies. Though government is giving interest subsidies on with respect to investments in plant and machinery, which has to be availed by way of loan, by way of an application with respect to subsidy. So that is what I'm aware about.
Okay. One more question is there, but I don't think it has a practical applicability, but I'll ask, how could we ascertain the MSME status of the vendor in case the company is not providing any information?
That's a very nice question. In fact, if you go on the portal today, you will find the list of all registered MSMEs on it. And there you will be able to find out whether your vendor is an MSME or not. Today, and as you are aware, as chartered accountants, you will also have to, there's a disclosure requirement wherein if there's a due from MSME, it has to be specifically disclosed in the financial statements. So to that extent, even if there's no correspondence, or for that matter, if your supplier hides from you the status, you can go to the portal and find it out yourself.
Thank you, sir. One question is left for Somil, sir. May I have the permission, sir? Kindly throw some light on project reports submitted to the bank for finance and assumptions are getting a challenge in valuation, the consequences for the business. Some light on the project report submitted to the bank, bank for finance, and what are the assumptions?
Project report submitted. So assumptions, all assumptions has to be have some facts. I mean, some derivations from the history or on what basis you have made the assumptions. If you are predicting the future cash flows, then you need to predict the growth trend of the company, like at what scale it is growing. And if not available easily, then you need to see the peer companies at what stage they are growing. So for that and all the other subjective factors. Like if we talk about the risk-free rate of returns, so it is generally calculated or taking the government bond rates or other factors as well, the equity discounting factor. So we need to check the similar industry segment wherein the companies are operating, and we need to add certain discounting factor based on the PL company ratios. So that is very important. So challenge might come, or they may ask the questions, but practically we need to justify what the valuation, what the assumptions we have taken, and if it is justifiable, then it will be acceptable.
Thank you, sir.
Just
Dear
to add here,
members,
just to add here, with
yes,
respect
sir,
of the
please.
legal perspective, eventually if there is any case which happens on assumptions, there is a very important disclosure which you should provide, and all the factors which can probably affect your assumption must be in detail specified for any eventual non-payment or any eventual case which may happen against you. So even such slight legal inputs will help in long term for your client eventually, in case if he is defaulting.
Thank you so much, sir. Thank you. Dear members, this webinar was basically for the purpose of opening up a new avenues for the practicing chartered accountants apart from the traditional practices. Like one business avenue could be valuing the business. The another, which we came up, is being a catalyst for the MSME sector. As Nitin sir has shared with us the statistics that 66 lakh MSMEs are registered over the MSME portal, and how we as chartered accountants can, involve in getting them registered in fulfilling their legal requirements and for compliances with the laws and taxation. So this was a very comprehensive webinar on both the aspects, which could open the new avenue for us. So thank you to both our panelists, Somil sir and Nitin sir, for being with us and spending your precious time with us. Thank you so much for the insights you have shared with us. I would like to thank Purushottam sir, who has probably left the meeting as he had yet another meeting lined up behind. So thank you so much for joining us. And thank you all the member participants who spared time for us and joined this webinar. Thank you, everybody. Thank you, Pragya. Thank you, the technical support, Manish. Thank you, Shrey. Thank you, Ajit sir. Thank you, everybody, on behalf of CPE committee.
Thank you, ma'am. Just again, I would like to reiterate, being a secretary of CP committee. Yeah, of course, as chairman sir said, from last 3 months, we have started a new initiative for sending, members to customized mail. I hope you are also, and the faculty also, other members, all members, they are receiving, customized mail, how many CP hours they have completed, how many are remaining. It might be there are some discrepancies. Of course, for that, we are advising to check in the dashboard of this thing. And if there is an issue, just you, member may reach to us by writing at cpadmin@ici.in. It's again a request, since this is the December, today we are on 13th. And for this calendar year, the last date is 31st of December 2023. So all, please you comply with requisite CP hours under various categories like COP holder, non-COP holder, senior. First year membership, they are exempt. That I would like to announce. So all, please go through requirement of respective category and complete, because after 31st December, especially for structured, you are not able to complete once the date has gone. So again, this is a humble request from office. Thank you. Thank you, ma'am, for wonderfully moderating this event. Thank you so much.
Thank you so much, sir. Thank you. Thank you, CPE committee, for making me the moderator for the webinar. And thank you, everybody. Thank you.
Thank you.
Thank you, everyone.